Hello and good morning. I welcome you to the morning meeting today on Monday, the 23rd of April 2018. This is Jens Klatt speaking, exclusively presenting this format to you here for JFD Brokers as the Global Head of Research and Education. We want to have a look at the markets and how things are developing. The DAX started quite choppy into the trading week, has seen some losses, which drove us something like 100 points lower. Now the market is making all these losses back and trades back above the 50 exponential moving average on a 5-minute time frame. I mentioned this during the German version of the morning meeting. I already said that I consider the price action against the lows to be positive. And it seems as if it was only some choppy price action which took place there based on an oversupply. Yes, not more than that. So have a look here at what happened. So we started out the trading day. DAX, didn't see any price action during the first hour of trading. 6 a.m. till 6 till 7 a.m. p.m. a.m. a.m. GMT. I'm sorry. And then started out and saw some losses right from the start of the trading day. Pushed below the lows here from last Friday, which was also a very choppy trading day. All in all, and then the market saw an aggressive move back towards, in this case, the 50 exponential moving average. You can see it here. This is the blue line, and I use it as a trend filter. So it's a very, very nice tool, in fact, to identify the overall advantage, and not just the advantage here, but also a dynamic intraday support and resistance line. And as you can see here, the market found resistance against this level, then lost again, but didn't make it to respectively below the lows here, which we made after the first 30 minutes of trading. And now the market is trading back towards this region, respectively, in this case, above the exponential moving average 50 here on a 5-minute time frame, which is a clear sign that probably the DAX is about to, let's say, bottom out on an intraday time frame, and then probably start to trade back above the 50 exponential moving average here. Something we definitely have to wait for, but so far it seems as if we really find support against this region. And this is in fact very interesting. So in the German piece here, I wrote, it's a German piece, but nevertheless, let's have a look here at JFD Research, the website. And let's scroll down a little here. There you can see it. The flag in this case is German, so the article is German. But what I want to refer to is only the headline, and obviously here 12,500 points. So I made this already a topic here in the in this research piece. And as you can see, by the way, you can also find quite a lot here in English on this website. So I highly recommend visiting JFD Research here. The website, you can access it by going via jfdbrokers.com and then via the tab Research and Education. And so 12,500 points. Why do I mention it already in the headline of my technical piece? It's very simple, because this is the region around those highs which you can see here, and against which I think the DAX can be possibly traded from the long side. So everything above 12,400 points I consider to be bullish on an hourly chart here. And as you can see, the market, after pushing towards 12,600 points, especially last week on Tuesday, and this as already presented, it seemed as if it was some hedging taking place here based on the small expiration which took place last Friday at the Eurex, where the FTX is traded, and the options on the FTX. And then the market is correcting some of these moves, but it's a very, very choppy corrective move, which shows that the overall push seemed to be a sustainable one, which means that I consider then, in this case, long engagements against 12,500 points to be valid, and everything above 370 to 400 here should be considered long, yes. And let's just see now whether the DAX can really find some bids against this level. If we make it back above, in this case, this is the first small intraday target, the spot open, which can be found around 12,540 points. I think it's a good chance that we can also push towards 570 and probably above that then, and attack 12,600 to 650 points. Some of you might be surprised that I'm little bullish right here. It seems to be quite bullish, to be honest, intraday, especially after those losses here of 100 points. And now seeing the market probably strengthen 50 to 100 points on the upside instead. But the main reason for that is that I think that chances are good that the DAX can find some serious demand now, based on some speculation which probably will take place around the ECB on Thursday. So all in all, next week on Tuesday, it's the 1st of May. And the 1st of May is usually a day... one sec. Okay. The 1st of May is a bank holiday here in Germany. And now the interesting thing is it's Tuesday, so it's likely that some market participants probably will take a day off on Monday too. This is the 30th. So that means we are about to see a prolongated weekend here, even though there will be trading taking place in the DAX in this case, and the FX markets for sure on Monday nevertheless. And so now the thing is that some might probably say, well, that means that into the weekly close, Thursday, probably market participants start to scale back and then prepare for a prolongated weekend here, which is not the case this week due to the fact that the ECB will have their rate decision on Thursday. And it's not the rate decision which is so interesting, but it's more that I think that Mario Draghi will find some, or has some motivation to start another attack at the euro and somehow try to down talk it. At least giving some hints which will lead to some serious euro supply in the market then, and push the market probably down towards 120. Probably he'll be capable of pushing the euro down below 120. And this is, I mean, he could easily argue it by talking about the inflation rate, which is still far away from the target rate at 2% here, the ECB target rate. But on top of that, it's also that there is trade war fears. It's still trade war fears in the market. It's trade war between the US and China, but also between the US and Japan, and the US and the Eurozone. All of these are attacked, all these countries and their currencies are attacked from Donald Trump, who mentioned several times that he does not like the fact that in this case, German renminbi then, but also the euro, for example, are trading at their current rates here, thinks that the US sees a disadvantage in terms of trade here. And so based on that, I think that Draghi could probably try to somehow counter these comments here and really try to down talk the euro in a smart way. Nevertheless, so we are not talking about a very obvious attempt to do that. And the great thing about this is currently, and this is probably something which also the ECB will be aware of, have a look here at the very interesting development in the euro future. So in the Commitment of Traders report, which was published last Friday, it shows that the current Commitment of Traders report reading is giving us the heaviest net long exposure in the euro ever against the US dollar. So the market participants here, even though we are only talking about not 10, but even below 10% of the overall open interest here in the market, nevertheless, it's a good indication showing that the market is currently heavily net long the euro. And saying that, or that said, it means, I think, nothing more than that there's a good chance that probably Draghi will use this one-sided trade here to find a driver and probably force those market participants to dump their positions. If they dump their euro long positions, well, on one hand, that means that chances are high that the euro will trade lower, respectively, and you achieve that by down talking the euro somehow. Well, on the other hand, it means that this could be potential bullish driver, in this case for equities, European equities especially. And this is something to really, this is something noteworthy and very interesting, I think, and which will lead to potential higher volatility into the weekly close then. In case of the euro, that means nothing more than I definitely prefer short engagements currently, also from an intraday perspective, meaning nothing more than if we go down to the 50-minute time frame, for example, that I say, well, I short pullbacks towards 2260, 2270 on an intraday trading time frame. Respectively, in case of the DAX, I consider long engagements against 12,500 to be probably interesting. Also, it somehow between the lines means nothing more than we should be really careful currently with seeing a strong correlation. Yeah, I think this is the good way to put it. A strong correlation between the US equity markets, in this case the Dow Jones, and the DAX, for example. So it could easily be that, especially when markets are expecting the ECB to come out more dovish on Thursday, that they probably will we naturally see bids in the European equities, especially the DAX. For example, if the US equity markets present themselves weaker, mainly due to the fact that the US dollar currently is gaining some momentum and seeing some strength, that here probably the equities in the US could probably see some pullback based on that such a pullback does not necessarily go hand in hand with a pullback in European equities too, but probably a stabilization. And if then US equities start to stabilize again or start to see some bids, that then there will be an outperformance from European equities. I think this is definitely a fair way to put it, and something to remember when looking at the current correlation between European and US equities. So yeah, that's it around Euro USD and also the DAX and the Dow. Now have a look here at pound sterling. Pound sterling sees further offers here and is currently attacking the region around 139.70, 139.60, 139.70, the region around the April lows. If we break below that, there's further room on the downside, obviously. And I want to emphasize it once again. I don't prefer long engagements in pound sterling after last week of trading, after the data coming in below expectation, and especially after the comments from Mark Carney, the current governor of the Bank of England, who just said that there are other meetings in the future where the Bank of England could consider to hike rates here. And so currently, pound sterling is definitely not the place to be to have long engagements. And if we add here the sentiment extreme in US dollar and the greenback to it, that means on top of that there's further room on the downside probably, and then potential momentum and acceleration on the downside if the US dollar finds some bids here too. So GBP USD currently is seeing an attack at a quite significant level here. The same as for Euro USD is true for Pound Sterling USD. Every pullback here is a potential sell the bounce if you want. So I think there's further room on the downside. Also, after or even though we have seen some quite significant losses here over the last 7 days of trading after the attack of the current yearly highs and the slight push above that level, even though that looks extended and we are still seeing a full regressive move here. Nevertheless, I think there's further room down to probably 137. Nevertheless, from a risk reward perspective, you should definitely wait for a bounce before entering a short trade here, and this depending on the time frame you're trading in. Also interesting to watch currently, dollar Japanese yen. So just to make sure that you do not miss it, or you didn't miss it here. Very interesting. That's a chart, by the way. It's around 1.5 hours ago, at around 8 a.m. GMT. It was that the 10-year yield in US was attacking 3%, trading as high as 2.99. So currently probably there is an update needed. So let's have a look here at Bloomberg, even though it's not real time. Let me just have a look here. 10. And there we go. Let's just see. Would be surprised to see it above 3 now. No, it's not 3. Did we make it up to 3? No. So far, no push above 3, but nevertheless, the current bullish momentum in dollar Japanese yen is probably mainly yield driven. And I think there's further room on the upside. If we make it above 3% here, I could imagine dollar Japanese yen to trade as high as 110 and probably even higher than that. So it's definitely, it's in fact what I just told you over the last week here. You should be really careful when it comes to short engagements in dollar Japanese yen. I told you all the time that it's more likely that there will be a bullish break above 108 in dollar Japanese yen than it will be that there will be a push lower, even though we still had to consider it to be neutral with a bearish stance environment below 108. But this is definitely not the case anymore, and I think there's further room on the upside, especially if yields keep on rising here. The only thing which could really save the Japanese yen here, put this in quotation mark, but because I think the Bank of Japan just cheers right now because they say, hey, great, Japanese yen is sold again. This is exactly what we want to see. But the only thing which could, put this in quotation marks, save the Japanese yen is a risk-off move. And that's also something which could lead to a push higher in gold then, for example. Also gold here is seeing some serious selling. That has mainly to do with the fact that yields are rising, and currently there's no real risk-off move to be identified in the markets. Nevertheless, I still consider the performance of gold to be solid when looking at yields currently, which means I think this is no surprise seeing the gold strength, the US dollar strength right now and yields rising. But if the market can stabilize above 1,300 USD once, or until this move in the US dollar, this potential breakout out of this channel here, this downward channel is finished, well, then I think a next quite aggressive attempt to attack 360, 365 in gold could be around the corner. Nevertheless, currently I definitely step away from gold, visit or watch what happens here, and then just sees whether we can stabilize above 1,300 USD per ounce. And that's it. So I wish you all the best. Happy trading. Watch your stops. Take care. Talk to you again tomorrow, 9:30 a.m. GMT. Definitely look forward to it. If you have any questions, please shoot them over. I'd really appreciate to answer them. And I wish you again all the best. Happy trading. Watch your stops. Take care. See you, and bye bye.